So MarketAxess is testing a super critical moving average. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So we are seeing, some weakness in the major indexes, and there's been some, themes that's seen, significant pullbacks. Trading platforms is one of the economic signals, and here we have seen some major haircuts here in MarketAxess and interactive brokers. Yeah, so when I was, deciding what to analyze in this video, I was kind of hovering between two items. One was MarketAxess, in which there is a potential bullish setup, and the other was Goldman Sachs, in which there could be a pretty good bearish setup. But I have made numerous bearish setups, videos as of late. So I think that it's always important to to be on the hunt for both kinds of opportunities, because that's how you can have a more market neutral approach. But certainly, there will be times in the market in which there are substantially more bullish opportunities than bearish, and the inverse. So let's look here at MarketAxess. So 3.6% away from the 52-week low, and minus 26% haircut. That is substantial. So here is the company's website, MarketAxess. Now you're in the market. Plug into the single global bond trading platform that amplifies your abilities and multiplies your opportunities. So the key thing is that the bond market is way more important than the stock market in a big way. All the talk about the old bull market in bonds dying, and other more epic theses about the bond market out there, it's a big deal. So there's a very high probability that something epic will happen to bonds. What? Well, that is to be determined. But anyway, an increase in volatility that would be beneficial for MarketAxess. If we go here to the charts, so this is the very, very, very long-term picture. And you can see, 2,400-ish gain within this time frame. Obviously, that's pretty darn good. What I find especially interesting here. So now we have gone way back here to 2010. So look at this blue 100-week moving average. Test, test, support. Test, support. Here we do slightly go below. So that can happen. But then we test, get above. Test, rather surgical, test, and guess what? We are testing that key moving average again. So that moving average, it's a really, really, really big deal. It's supported the entire bull market for this stock, and yeah, we are testing it more vigorously now than we have in a long time. The primary expectation is that it will function as a support. That is what makes sense given all the data we have seen. Also looking here at the RSI has pulled back to a territory that tends to trigger rallies. And even if we are going to make a more bearish thesis for MarketAxess, we could argue that we could be in the process of forming a very substantial head and shoulders pattern. The bullish thing about the head and shoulders pattern is that we need a right shoulder, and that would mean that at least temporarily we would see a rally before the pullback and breaking the neckline. It is not really a roaring bullish thesis, because a major head and shoulders pattern is not that's bad news. Of course, it is fully possible for the bulls to neutralize the head and shoulders pattern by smashing above, the head. That's possible. But basically, even the bears would be okay with MarketAxess rallying a bit here, because the technical setup is vulnerable already. And that is, frankly bullish in a sense. But so yeah, so there's multiple factors arguments for why we could see a rally. Obviously, if we do break below the 100-week moving average and then it becomes resistance, we get something like here that can become very problematic. So the bulls need to act. Here are the daily data points. Yeah, not a very attractive picture. At least, from a bullish perspective, this is not really a sight of beauty. But you could argue, and this is one of the paradoxes with head and shoulders patterns, is that here you see in the head, we have a double bottom. That is a bullish technical setup. So that's interesting. That is supportive of a speculative bullish trade. Looking here at RSI, we have reached a territory that tends to trigger rallies. It is very rare historically for MarketAxess to get even more oversold. Rather rare indeed. And that is also more beneficial for the bulls. Looking at the PPO, it has reached a low territory that also tends to trigger some mean reversion to the upside. Looking here at seasonality, we see that May is one of the more mediocre months for MarketAxess, but there is this very interesting cyclicality here. As I think you see, there is this like this. There are these waves here, which means that the coming months, June, July, and August, they tend to be decent for MarketAxess, and that would be fully supportive of us at least forming using those months to form that right shoulder. If we go here to Finviz, we bounced off this trend line, so support. Looking at analyst price targets, they are significantly above the current price. If you look at all the most recent developments, there's a bunch of upgrades. That's good. So the analysts, they suggest 25-ish% gain from the current levels. That's bullish. Saks.com, they are not feeling the love at all. They have a number 5 strong sell. But that also means that they can't really downgrade the sell score here. It doesn't get worse than 5. The value, the growth, the momentum. Industry rank, top 45%, securities and exchanges. There's a mediocre dividend of 0.58%. But yeah, so Saks is the one that is really not feeling it for MarketAxess. So, to sum up my take here for this stock, I think that this 100-week moving average in blue, it's a big deal. The bears have done a lot of damage. And given, the seasonality, the analyst price targets, it would make sense for the bulls to rally a bit here. And that wouldn't be dangerous really for the bears either, because the bears can come back and smash that rally and form, a very big head and shoulders pattern. So basically, the bulls have reasons to rally. The bears have reasons to be a bit more relaxed, maybe look for better opportunities. As far as bearish setups, I think that Goldman Sachs, that chart, might be some better pastures for the bears. So yeah, I would be speculatively bullish here on MarketAxess, but it is very speculative because this is basically contingent on head and shoulders pattern potentially forming. It is, of course, possible for the bulls to neutralize that pattern if they rally strongly enough, to break above the head. But yeah, interesting, very interesting setup. Whatever you do, of course, you do ideally want to be market neutral in this market, basically, because we have seen that there's major rotations. Some of the super high beta themes, they have been decimated, while we have seen other themes roar, hundreds of percents recently from the lows. So there's always these huge rotations, always huge opportunities. It's all about being very laser-sighted on the next big move.